And as we're driving down the boulevard today, I'm just thinking, how many of these people who are just already drunk at 10:30, 11 a.m. have no idea what's happening to their pensions, what's happening to their IRAs, what's happening to their money markets. It's Tuesday, April 26, 2022. Let's get right into it today. I'm sitting right here next to my good buddy Matt. We're in Las Vegas, Nevada. A lot of people out here. And as people are out gambling, spending money, partying, Dow Jones, stock market across the board, absolutely vaporized today. The Dow was down 810 points, NASDAQ down 514 points. And to break it down, the Dow was down 2.38%, NASDAQ down 3.95%, nearly 4% today. Major global inflation worries are taking place. Matt, what's your input on what happened today?
Well, we expected this basically yesterday, but they saved it. Today they couldn't save it, so I guess bad news was bad news again. The reality struck home today.
NASDAQ worst month since the financial crisis. That is almost an ominous sign right there that we have to go all the way back to the financial crisis of 2008 to compare these NASDAQ numbers. And we got more bad news. Whirlpool cuts guidance. First quarter sales down 8.2% compared with the same quarter last year. Their CEO, Mark Bitzer, says shortages will remain throughout 2022, Matt.
Not surprising. Problem is, this is going to reverberate to the home builders, right? Because they rely on those products to deliver completed homes, refrigerators, washers and dryers. So it's going to have a tag-on effect, I think, in a big way for the housing market.
Yeah, that's a great point. As we all know, banks are not going to loan on homes until completion. Homes cannot be appraised for a loan until all those appliances are installed in those homes. And this is a big problem. Also today, we got more bad news. Consumer confidence disappoints in April to 107.3. And that has to be no surprise to anybody. Yet, today, I'm watching some of the business channels this morning, and they said that this was unexpected, Matt, that consumer confidence disappointing was unexpected.
Yeah, that doesn't make any sense to me. The reality is confidence is always high when they have more limits on their credit cards. Once those limits reach a max and dry up, confidence always declines. And they don't want to admit that. They want to portray the picture that everything is fine, the economy is doing well, the consumer's strong. That's just not a reality.
And even today, when we're watching this stuff, I mean, they are cheerleading, telling you that everything's going to be okay, even though a lot of this was unexpected. I don't know how you couldn't expect this. And does any of it matter when your GDP is based on 70% consumption? Again, we are a country of consumers, a country of borrowers, people just living under so much debt and drowning in debt. And we're seeing that here, like right here in Las Vegas. New home sales crash in March, down 8.6% month over month. They were expecting that number to be 0.6%. Matt?
Well, new home sales are going to probably continue to crash as rates go up because new homes are no longer as attractive to buy, or many people are just priced out of the market. So as rates go up, you're probably going to see new and existing home sales decline precipitously.
And if rates go up and home prices go up at the same time, something has got to give. Something breaks, and I think that's going to be home prices because at some point nobody's just going to buy a home. New home sales now are down 12.6% year over year. I think we're seeing big trouble in the housing market, and this is going to spill right over into existing home sales. We already have a commercial real estate market in a massive depression, and how does anybody at this point even able to afford a home? Because as you mentioned the other day, even though rates are around 5.11%, maybe a little bit more, the real number is around 7%, 7.25%. Because if you don't have perfect credit, if you don't have that 20% down, and what about the debt ratio, Matt?
I was going to say banks are, I believe, tightening lending restrictions. They're not doling out the loans like they used to. and that's going to impact the average home buyer. They're going to be forced to go out and rent rather than buy that first home.
And I know that there are realtors out there probably telling somebody watching this video right now that this is the time to buy. You better buy now. You will be priced out. And I think that you better be very, very cautious of people telling you right now to buy a house. I don't give financial advice. Matt's not here giving you financial advice. But really think about it. Who in their right mind right now would go out and buy a house today? And if somebody's in escrow right now, would you cancel that escrow, Matt? Would you stay in escrow? What would you do? Say I was a family member and I'm a week into an escrow right now, and I call you up and I say, Matt, I just bought this house last week. We're in escrow. I'm doing a home inspection right now. What do you tell me?
Well, I mean, look, at realtors are the cheerleaders for the housing market. So you're like you said, you're always going to have the agents, saying, let's close this. It's a great deal. You'll be happy there. But if I was a buyer, I would take a pause. Yeah. And I would think about, do I really want to close this transaction right now, or sit on the sidelines for a while and see how this plays out? Because it appears to, I think, to me and to you, that the housing market is the next balloon to pop here.
Well, and we're seeing the telltale signs, because if you look at mortgage apps, they're absolutely plunging at this point. And that should tell a lot of people right now what is happening. And what's scary is the amount of homes that are under construction throughout America right now. It's a record-breaking number. I mean, we're looking back at 2006 type numbers with new construction. And what happens when those homes are completed and there aren't enough buyers? And there are going to be no buyers if these prices continue to rise and these mortgage rates continue to rise, and people are being inundated with debt. So the debt ratio is going to be a big factor in these loans. What happens, Matt, when these markets or when these homes begin to hit the market mid-summer, late summer?
Well, they're not going to be able to move them, because as the rates go up, a home buyer has to qualify for a mortgage at a higher rate, which means they're going to have to show stronger tax returns, stronger balance sheets, stronger ability to repay that loan. They're going to have to show a better FICO score. That's not going to happen. The real incomes are going down, while all of the lending restrictions are going to be going up. So it's not going to be a compatible situation.
And the real interesting part of this will be inflation. People may say that they're making more money, but in reality they're making less money because of inflation. And if you got a 3%, 4%, 5% raise in the past year, you're actually making less money, because the official inflation number is 8.5%. We know it's probably 17 to 20%. So what role now is inflation going to play in the housing market?
It's good. I think inflation, as inflation keeps rising, that's going to have a cooling effect on the market. In addition to all the other things we just talked about, that's going to be an additional factor that's going to contribute to, in my opinion, a slowdown, an inability for inventory to be moved through the system.
While we're out here in Las Vegas, it's almost shocking to see people out here as we're driving down the boulevard today, and people are out drinking at 10:30 in the morning and gambling and what have you. And look, I'm not opposed to anybody having a good time, but this is a very serious situation we're in. Look at the markets last week. Look what happened Friday, nearly 1,000-point loss on the Dow. Today, I thought the markets should have been down even more on some of the news that we were getting, some of the data. We're really lucky that the Dow Jones and the NASDAQ wasn't down more. And as we're driving down the boulevard today, I'm just thinking, how many of these people who are just already drunk at 10:30, 11 a.m. have no idea what's happening to their pensions, what's happening to their IRAs, what's happening to their money markets? I mean, if we have so many people, and as we talked, if you didn't see yesterday's video, please check it out. But, basically the average 401k is like $45,000 before taxes. And people think that they're going to retire, cash out their 401k, $45,000 before taxes, and ride off into the sunset. And the problem is, you're not going to get even $45,000, because people are going to take a massive haircut here. And I bet if people looked at their 401ks today, they took a big hit.
Yeah, there's two impacts. There's the impact point of taxes. There's also the fact that today, for example, if your 401k portfolio is heavily invested in the NASDAQ, which is tech predominant, you lost 4% today. You lost 4%
in a day
of your portfolio today if you were primarily in the NASDAQ in one day.
And there was a very interesting article on CNBC today, and this article said that you shouldn't look at your investment accounts every day. Now, that wasn't a problem when the markets were just skyrocketing day after day after day, soaring and soaring into the clouds. They wanted you to look at your investment accounts every day. Now, they don't want you to look at your investment account every day. Why is that, Matt?
Well, because they probably know when people see their accounts decline, they're going to pull their money and decide to look at some other asset classes, and that's not going to fit the ongoing narrative that you need to be buying the dip.
So we saw markets across the board today absolutely vaporize, and so is it this global inflation that is the threat? Is it the talk of a 50 basis point rate hike in May and 75 basis point rate hike in June and continued rate hikes throughout the year? What is your 2 cents, Matt, on what really caused the markets to sell off today?
I mean, all of the above. You know, we were perplexed yesterday that they were able to bring in the cavalry at the last minute.
And go back to that. The market was down almost 500 points yesterday and closed up 238 points. Does that seem a little suspicious to anybody? Based on what?
Right. I mean, today appeared to be more of a reality check for the markets, like it assessing the news that was coming through. The economic news was terrible. The earnings after the market closed today were not very good either. So I think it's just a compounding effect.
What do you think we'll see tomorrow?
It's tough to tell. You know, the earnings were not solid, I don't think, from what we saw after the close today. So there may be a follow-on with this sell-off.
Yeah, who knows?
But it's anybody's guess. I mean, we'll say, it's going to be down tomorrow.
Right.
It'll open up 1,000 points, and gold will be down $15, and we'll be scratching our heads.
It's hard to forecast something that is so manipulated.
But put it this way: there's no news as of right now that would support a higher market open tomorrow.
Right.
There should be a follow-on sell-off, but we'll see how it plays out.
Absolutely. U.S. durable goods, U.S. durable orders growth slowest in 13 months. That's not positive news for these markets either. And we were talking earlier. There really is no place now to hide. Share to.
No, I mean, cash right now, the dollar seems to be going up as everything else is going down. Metals actually are kind of flat today. The metals did what the metals do. They held on. They didn't get destroyed. And so what they preserved your position today. So if you're holding metals and holding the NASDAQ, which would you rather had today? I know which one I would have taken.
Yeah, oil and gold were about the only two things in the green today. While we're out here in Las Vegas, and I'll leave a little bit of B-roll on this video also on some of the sites, but what I find very common as we're walking through multiple casinos and shopping areas is the amount of people walking around like zombies on their phones. There's so many people that just stand right in front of you, just enamored, comatose, looking down.
They don't stand in front of you; they walk into you because they're looking down.
They'll walk right into you. They stand in front of you. They're falling down.
Yeah, true.
And we all know about the surge in crime, and people just are so oblivious to what is happening, and people are, you got to be so careful out there now, and you really have to know your environment, and you really have to be exercising situational awareness. I cannot believe everywhere we walk, it's just people walking with their heads straight down, and it's amazing that the crime isn't even higher than it is now, because these people are just easy targets. And so be conscious of that. Because I know that we are addicted to our phones, and I carry my phone most places too, but it's incredible to see how many people here in Las Vegas walking through casinos, walking through the shopping centers, just heads down, just oblivious to anything in their surroundings. Matt, you want to share anything?
Yeah, try to break that loop. I do it too. I get into that scenario where I'm looking at texts and emails, but break the loop, exercise situational awareness, try to keep it, some awareness of what's going on around you, so you can be proactive and not reactive and not defensive. That's not a good place to be, whatever it is, but especially with the crime rates going up.
So we'll leave it there. Again, I'll put a little B-roll on here for all of you, but we'll see what the markets have in store for us tomorrow. It was a crazy ride today. It could have been a lot worse. In all honesty, it should have been a lot worse. There is not a lot of good news out there. And you have to think behind the scenes, they are doing everything they can. We're going to get earnings tomorrow, and imagine just how manipulated those earning numbers will be in order to keep these markets afloat. Things are much worse than you think, ladies and gentlemen. And look, the markets could be up, the Dow Jones could be up 7, 8, 1,000 points tomorrow. It doesn't even matter. This thing is in big trouble. These markets are going to continue to get hit hard. And yes, we're going to see them come back. You have the Fed still in here buying.
Well, we're coming up on a Fed meeting, the
third or fourth?
So 7, 8 days, the Fed's likely going to go at least a half a basis point.
Right. And look, there's no doubt that I think that these markets are pricing this in right now for May. But what happens in May, knowing that now we could have a 75 basis point rate hike in June? So I think we're going to continue to see a lot of volatility. They're going to try to get these markets up tomorrow. I don't know how you do it because there's just no good news out there. This economy has failed. This economy is rotting. And I just don't see any way out of it. And I think we're going to see more people running for the exits. And I believe that days like today are going to accelerate, and we're going to see bigger losses in the very near future. Matt, you want to close it?
No, I agree with what you're saying. Just stay tuned, exercise caution, get your mind straight, and get healthy, and be smart with your money. Save, store some food and water, like we talked about yesterday.
All right, we'll check in tomorrow and see what's going on. But make sure you make sure to subscribe to the channel. Make sure you share this video with everybody, and hit that bell notification down below so that you are alerted with the newest videos. God bless you all. Talk with all of you very, very soon.